joining us live from Zurich is Florian Esterer. He's fund manager at Swisscanto Asset Management. Florian, what's your take on these figures?
Good morning. I think these are very, very strong figures. We were actually fairly pessimistic into the numbers, and they easily beat what we expected them.
Yeah, why were you pessimistic?
I think the trend that we've seen is a lot of the European bank numbers was that the Q4 investment banking numbers were very weak. That is true for Credit Suisse, that was true for U.B.S., and we expected Barclays to sort of fall into the same camp in that analysts hadn't taken estimates down far enough for the weak fourth quarter, but it didn't seem to happen for Barclays, and that is a very good sign. It seems that they're aggressively moving on market share and gaining a lot.
Yeah, the concern surely must be on the one side, on the revenue side at least, that Barclays Capital is really dominant here, and the retail side of the bank is still perhaps a bit weak.
Yes, that's true. I think that, but that's an issue that management is well aware of. I think they always said they wanted to be 1/3 investment banking, 2/3 commercial retail. Currently, it's the other way around. We can see that the Lehman transaction was just too good to let pass, so we'll give them a little leeway. I think what will happen is that they have been over-earning a little bit in the investment bank, and they've been having massive charges in the retail bank, and I think as these trends sort of mean revert, we'll see them come back to a more equal weighting between the two areas.
Yeah, that brings you on to, they didn't buy the Asian assets there when they went to Nomura of Lehman Brothers. That's a bit of a geographical hole, isn't it, for them?
Yes, but I think that's something they're addressing. From what we're hearing, they're hiring aggressively. I think there were good reasons why they didn't want to buy them at that point in time. But they're continuously building up their franchise, and from what we're seeing is they're doing a pretty good job.
Let's just also talk about the bonus side of things. John Varley here, the chief executive, and Bob Diamond, the president, declining a bonus this year. That sends a message out, doesn't it, to some of their peers?
Yes, big message. I think it's a very smart move, politically very good. And I think that takes a lot of pressure off Barclays. They're probably paying a lot of bonuses to their traders and investment bankers. But I think with these two guys standing up there saying, we don't want any bonus, I think that's a very good sign.
This is a bank here which does have a strong potential to build capital over the next few years. Do you think that that's factored into the share price?
No, I think that has been our thesis on the stock. I think even before the current numbers, they showed that they were quite able to build the capital. So far, they've been building that at like 50 to 70 basis points per annum on their core tier 1. Now we're well above that, and if they got targets reached by 2012, I think at the current rate they can easily reach any targets people come up with, and therefore I think the stock is just simply too cheap. And anybody who thinks they need to raise capital is misled.